So you said in your email to me that you now have like a run rate of like 100,000 Aussie dollars a year in sponsorships. How did you when at what point did you start, taking on sponsors for the newsletter, and like what was your kind of strategy for finding sponsors?
The good thing that's happened when I launched this newsletter is like the amount of interest and capital and folks getting involved in Australian startups has really picked up. And I think we were sort of at the front of that inflection point. And what's happened in the past, I guess, 2 years is some very big US brands are now building a presence here in Australia and really looking at the Australian market as a growth area for them. And I think that sort of group of sponsors who are US well-funded coming to Australia to build their presence has really allowed us to charge a healthy amount for sponsors, provide a lot of value back to them and build that up.
Hello, I'm Simon Owens, and this is The Business of Content, the show about how publishers create, distribute, and monetize their digital content. When Will Richards first started compiling startup news, he wasn't trying to launch a media company. He was working at a family office and needed a better way to track what was happening across the Australian startup ecosystem. After realizing there wasn't a single place that aggregated all this information, he began sending out a weekly email. That side project eventually evolved into Overnight Success, a newsletter read by thousands of founders, investors, and startup operators. But Richards didn't stop at building a newsletter. He's since expanded Overnight Success into a broader business that includes sponsorships, a startup database, and an investment syndicate. In our interview, we discussed how he grew within such a narrow niche, why a small audience can still attract major sponsors, and how he's turning years of startup coverage into a valuable data product. If you want to listen to an audio version of this show, subscribe to The Business of Content wherever you get your podcasts. And if you're watching this on YouTube, gently tap on that subscribe button so you can watch more interviews with the world's most successful media entrepreneurs. Okay, let's jump into the interview. Hey, Will, thanks for joining us.
Thanks, Simon. Thanks for having me.
So super excited to talk to you. You have, really interesting business model, really interesting niche audience and newsletter. So I want to dive into all of that. It's a newsletter that focuses primarily on kind of the startup scene, but specifically in Australia. So I like when there's that kind of like niche within a niche, like using both geography and industry. And we'll kind of talk about the advantage of that, especially when you're competing with other, US based like databases like Crunchbase and stuff like that. So excited to talk about that. But first, I just want to hear a little bit about your background. I know that you maybe started in finance and then you moved into more kind of traditional VC investing. Kind of walk me through kind of the evolution of your career that prior to you launching this newsletter.
Yeah, I think the newsletter has been a big part of the evolution of the career as well. So I guess I kind of left university here in Melbourne, Australia, and had a banking and finance degree and a design degree as well, and was sort of looking around at what to do. And I had fortunately interned at a private equity firm and sort of really enjoyed that experience. And we were sort of doing like mid-market, pretty random things, like there was a chicken farm and some oil and gas stuff and a fishing business as well. So kind of got exposure to a few businesses that I had never been exposed to before, and really enjoyed that.
Just buying boring businesses and flipping them basically.
Basically, long hold, turning them around a little bit sometimes, making sure they were operating sort of as efficiently as possible, all that sort of stuff. Very small firm. So I was definitely at the coalface of seeing how some of those things get done. But, I was a very small fish in that world. And that kind of got me exposed to, I guess, the world of finance and really fell in love with it, really enjoyed it, really just enjoyed trying to understand how different companies worked. And that led to my sort of next role, which was more of a family office that specifically focused on early education here in Australia. So childcare businesses, we were sort of developing the land, building the childcare centres, and then running the businesses.
So this was a family. The guy I
worked for there.
It was a family office, as in there was a rich person, and they had they had a wealth management firm, or maybe their own dedicated family office that was taking their money and investing it in businesses.
Yeah, 100%. Yeah, he'd made the majority of his wealth doing this at a previous business. So he was really into the world of childcare, and saw a massive opportunity to sort of keep doing it. When I joined, there were I think about 15 childcare centres under sort of the remit, and when I left, we had about a year and a half, 2 years later, there was about 60 or 70 with another 50 on the way. But the guy I worked for there was very entrepreneurial, super high risk taker, He'd actually, in his previous childcare business, had made a really early stage angel investment in a software company that serviced the childcare industry, so sort of helped handle payments for childcare centres. And childcare here in Australia is very much is super regulated, and also the government pays a certain proportion of your childcare fees. So the system that he invested in kind of helped the centres organise that. But essentially what he then had a taste for was, this company had gone really well, and he'd had a nice return on it. So he was kind of like, oh, Will, can you just, find me the next one of those? And it's like needle in a haystack, right? Like, go find me the next startup that I made a lot of money on. So I used to just spend a few hours every week sort of researching the Australian startup sector, paying attention to who was really interesting coming through, who I thought we could be a strategic investor in, obviously looking particularly at the early education space. And I got sort of deeply frustrated that there was no one place to go that had all this information. There were, Australia has quite a monolith or a duopoly of media businesses here in Australia. So we have sort of like the Financial Review, Nine Media, and a few other publications, and they're all behind paywalls. The journos there who cover tech are all fantastic, but they only do 1 or 2 stories a day at best. And there's sort of a lot more happening behind the scenes of Australian startups. And then you've got the Australian Startup Trade Press as well, and that's also a really small or relatively small publication that can only do so much. And I kind of realised that there were stories happening on some newspapers and some websites that weren't getting covered in others, and I thought there was an interesting opportunity to start aggregating that information. And that's essentially what I started doing for this family office. Like, I just started sending this like relatively large email every Friday or Saturday morning, so much so that the partner was like, Will, this is too big for us. Like, you need to start sending it to more people or cut it down a bit. And I was like, okay, well, maybe there's an opportunity here to send it and send it to a wider audience. And I think everyone in the world of venture capital, finance and startups are super busy people. So being able to aggregate that news and do that work for them is a really valuable thing. And I think I kind of stumbled upon that myself. So then I launched the newsletter, joined another family office that was much more focused on early investing.
So let's back up a little bit.
Which was really interesting. And I think
So you were sending this as this what is now the newsletter as kind of like a private email to this family office. And you were pulling it. You weren't doing any original reporting. You were just kind of like taking all these different sources and kind of like pulling it into a single newsletter or a single email that was getting sent out just within the family office, right?
Yeah, exactly. Yeah, so I was literally just using like Gmail myself to send it to like the 8 people in the team, and it was very much just like aggregation of other people's news.
And what year was that?
So this would have been about 4 or 5 years ago. I think maybe 4.5 years ago now.
So like at the end of the pandemic, basically.
Yeah, pretty much during the pandemic, when everyone had a bit more time on their hands.
So the guy says, you need to spin this off and make this something bigger. So what exactly did you launch? Like what was it called, and what platform was it sent on?
Yeah, so I looked around at what was working for other publishers, and I was a big reader of like Lenny's newsletter. Really enjoyed that content. There was a Australian newsletter as well called Letter of Intent, which really focused on corporate M&A deals happening in Australia. And that was a daily newsletter, single line of what the news was, but very much like a daily digest that folks could read. And I think I took a bit of inspiration from both of those early on, and decided to launch not using my name, which was quite a tactical decision, because I was essentially a nobody in Australian startups and venture capital. So if it was called the Will Richards newsletter, I think a lot of folks would have been like, who is this guy? I don't really like trust him necessarily. So I decided to put a brand behind it, which led me to then start using Beehive. And the decision to go with them, like Substack is obviously a great platform as well, but I don't love that every Substack newsletter looks and feels the same. I really wanted something that would like stand out on people's inboxes. So went with this brand. Well, I've created a brand called Overnight Success, and went with quite a gaudy branding principle, which was like dark and neon pink. Really, so when you were sort of going through your inbox on a Saturday morning, this email would stand out quite a lot. I just didn't want it to feel like every other email you get, and I couldn't really think of an email that used neon pink very often. So yeah, went down that route.
And so you launched that in like 2022?
Yep. Yeah, launched that. Really had essentially no subscribers early on. So I think for the first couple months, I was sending to about 50 people. Really just used a few local Slack groups that really focus on Australian startups for promotion. My LinkedIn, which again, I had sort of no followers on that. So for the first 6 or so months, I was probably writing, 8 hours a week on a Friday and sending it to about 50 people. And yeah, for the first year or so, it was a pretty small audience that just grew quite organically.
And it was just once a week you sent out the newsletter?
Yeah, so I'd write it on a Friday. So I was working full time this whole period, and pretty much have worked full time the whole time I've done the newsletter. But that period in particular, I would kind of finish work on a Friday. Had a relatively intense job where you were expected to work long hours in that sort of world of finance. So I would kind of finish. The team would go off for their knockoff beer, and I would sort of sit down back at my laptop and open up the newsletter, Google Docs, and get into it. So I would often finish Friday nights at sort of 1, 2 a.m. This is all before AI, writing. So it would get sent at sort of 7 a.m. the next, or 7:30 in the morning the next Saturday.
And while you're writing that in the early months, you said you went to go work for another family office?
Yeah, so that was probably the real driver of why I started the newsletter. And I got some really good advice quite early on about why we were starting a media business. Someone told me, really understand what your why is, the why you're doing this, because media particularly is really hard when you're early on. And my why when I first started was just to get a job in VC. And I sort of looked around at all the folks who were similar age to me, or maybe a few years beyond, who were working at venture capital firms here in Australia. And there's not many of them. It's a relatively small industry, especially compared to the US. And being very transparent, they were all incredible folks who had done lots of things on the side, or had built companies previously, or who had done things to build their own name and their personas. And I looked at a newsletter as a really sort of cheap way to build that leverage and that capital, especially in the world of startups and finance. Like, if you don't have the money, media is sort of the next best option to sort of build that leverage yourself.
I love that insight. Like, it's the number one piece of advice when people when people want to get lunch with me, or if they're telling me they're like looking for a job, or they get laid off from a job. It's like, stop just sending your resume out there. Just start, yeah, of course, continue sending your resume and doing the traditional job hunt and stuff like that. But if you can, try to create content in the niche in the industry that you want to be working in, because that's causing you to flex those muscles. It's causing you to keep up to date in what's going on in that industry, but it's also a great wedge to kind of make you stand out from every other job candidate. And you can start using that to make connections and stuff like that. And you can start having calls to action in your own newsletter saying, I'm looking for a job. There's lots of different ways you could be, working through media to try to give yourself a competitive edge over every other college graduate and applicant for any type of job. So you're working at this family office, but you want to be in VC. So
yeah,
how did the newsletter continue to evolve while you were at this other family office?
Yeah, so I guess what kind of happened really interestingly was I got this offer to join another family office that was setting up a angel investment membership syndicate sort of 6 months after launching. So the readership was really, really small. And, you sort of never know who's really listening to what you're putting out. But I had some quite good signals that some very influential people in the industry were reading it, which was really good. So a few partners at some of the biggest funds here in Australia subscribed really early on and are still readers today, 4 and a bit years later, which is really nice. So the family office I joined after launching the newsletter was they wanted me to help launch this angel investment syndicate. So I did that. And every employer I've worked for, because I've worked the whole way through. I think after I worked for that guy, and kind of realized that this media entity I had on the side sort of really helped my job occasionally. So whenever I went for a new job, I always made sure that the hirer understood the value of what came with me. And it's not like, oh, you now own this, but stuff comes off the back of this organically all the time, that we can definitely use. And I think there's been some people who have probably been like, that feels like a distraction. It feels like you're building something on the side, and I'm not interested in like someone who's distracted. I want you 100% on what we're doing. But then the folks who I've ended up working with have always been like, oh, this is really, really useful. So much stuff comes off it. So many opportunities. You walk in a room at an event and lots of people know who you are already, which is really good. And I mean, that only happens in startup events. I'll be completely honest. Like it's, it's a very small group of people who recognize you. But yeah, it's been quite cool to change that perception of like when someone's hiring you, like, oh, you come, like the media brand comes with you.
Yeah, and we're like, you said that there weren't a lot of outlets that were kind of reporting this stuff, or it was behind a paywall. Were these VCs, like they were trying to do competitive research and they were just coming across it on Google, I'm guessing, because there's literally not another, outlet out there that was reporting on these like obscure fundraising rounds and acquisitions and stuff like that?
Yeah, that's the thing. Like the insight early on was like, no one has time to read everything, and you may have a relatively expensive subscription to one premium newspaper, but you don't have the subscription to the other two. So you just basically miss some proportion of the rounds, or you don't get to read them. And you're probably aware that they happen because you're in the industry, or you may just miss certain ones. So doing that work of aggregating everything was really useful for the busy folks who work in startups. But I think whenever I meet someone in person who's a reader, and I think we'll jump into sort of like what I've done off the back of the newsletter, but I've always asked that question, like, oh, why do you read it? What, like, is it for work? Is it because you're curious? Like, do you use the information in that? And it's really interesting, the insights that come off the back of that, and that's allowed me to start thinking about what are the products I can build for the audience that is much better at being monetized than just the sponsorship, because the audience is relatively small. Like I can only push sponsors so far. So you have to think a bit creatively about like, oh, how else can I monetize this audience with the same information?
So you had only like 50 subscribers for a while. What was kind of the turning point that allowed you to start ramping up that audience? Because like I think you have like 5,000 now.
Yeah, so we're at 5.6 now. Relatively, all that growth has come organically. There's been a few spikes here and there, like some relatively influential people have given it a shout out. Those things are very sporadic, like that you just see like a little spike and then the organic growth just continues again. So we kind of grow like 1 to 2% a month, I guess. Like it's not amazing growth, but the reality is like there's just not that many folks who are super interested in this niche. And I've experimented a couple times with paid, and I think you can do that really well when your opportunity and your market's enormous. Like if I was just writing about startups or just writing about AI or just writing about marketing, like you could do paid growth and you could find some massive audiences. But when you're writing about a niche within a niche, I think like putting paid advertising on is really challenging, basically, and sort of not really worth it. So a few big shout outs from influencers who mostly did it organically, and then partnering with a few events locally who run events for startup founders and people in the ecosystem. So a few large like demo days where founders get up and pitch. Partnered with a couple of those for just some cross promotion opportunities, and they've also been quite big growth levers, which has been really, really useful.
How did you make then the jump from the family office to like actual VC?
Yeah, so that's actually only happened like relatively recently. So I guess I was doing angel investment, working with angel investors, meeting founders and coordinating those sorts of things. So I was doing a little bit of like, let's say like top of funnel, like assessing startups to make sure that they were high enough quality for our angel investors to have a look. And we did a couple of deals there, but we weren't fund managers. It was very much just like connecting folks and taking a bit of a fee. So I did that for about 18 months, which was really good to get some reps up and understand like I think how really early stage investing works, because this was often like the first time founders had raised money, and often for the investors it was the first money going into these companies. So that was super early, which was really fun. And I mean, you have to keep a very open mind at that level, because often companies don't have any customers or necessarily a product. And after I left that firm, I guess I was sort of looking around being like, I really need a bit of mentoring. I think there's an opportunity in the media, this media thing I'm building. I have no media experience. I didn't do like a media degree or journalism. And I really want to get better at writing. And I guess looking back at my whole career to date, I've kind of just been in the weeds without any mentorship. So I had this opportunity to join a lady called Jessie Wu, who was previously a partner at a venture fund here in Sydney. And she had left that venture fund, left the partnership, and was launching a PR firm that just worked with sort of scale-ups here in Australia, startups and VC funds. And we sort of connected off the back of me writing about basically one of their clients in my newsletter. And I was kind of like, why is this Jessie lady writing to me about PR stuff? Like, isn't she a venture capitalist? Like, I was a bit like out of the loop. Anyway, worked out that she'd left and she started this PR firm. And I decided to join her as the first employee, really to understand how PR and media works from the other side, but also just to honestly like get a bit of mentorship on how to be a better storyteller, how to be a better writer. So I kind of have done this like in the past, well, sort of all of 2025. I was took a pay cut, interned essentially at this PR firm, which was really interesting. Like the world of PR is, I don't think I was ever going to work in PR for the next 30 years after joining, but have, I think, learned some really valuable skills.
So you go to work for this PR firm, and then what?
Yeah, so one of the first clients at that PR firm was a venture fund that was basically launching, called Glitch Capital. So worked with them pretty extensively over that sort of year period. Got to know the team really well, got to know their mandate and the companies they invested in really well. So Glitch is Australia's first founders fund. And I think Australia is kind of at this point in startups where we've had people who've built really impressive businesses sort of exit or have started to reinvest back into the next generation of startups, which is, it's happened before, but I think it's finally at a volume where you can start setting up these VC funds. So this is sort of Australia's first venture fund who's doing explicitly that, which is really exciting. And yeah, got to know the team really well. And yeah, when I moved on from the PR firm, I've joined this venture fund to build out their platform, which I think we can get into as well. But yeah, building a media business and a media presence for that fund, which does look like a podcast, as well as a newsletter, borrowing, I think, a lot from what A16Z is doing in the US, and their whole sort of new media idea. Australia just doesn't have that sort of stuff, and no one, I think, at the caliber of our partners and founders and LPs is sort of present, telling their stories and sharing their insights. So super excited to be bringing that to the forefront.
But you've only been working there for a few months, so that's early stages.
Yeah, so I'm only 4 months in there. So some launches fairly soon, but yeah, not live yet.
But the thesis behind that with the A16Z and other firms is you create a media arm, and that helps, in marketing, it helps deal flow, it helps you kind of get the word out about, companies you're funding in. It basically the whole same thesis you were using to get the job in the first place, basically. But
yeah,
at a larger scale.
And exactly right. And I wouldn't have gotten this job if it wasn't for the newsletter as well. So yeah.
So you, like, as the newsletter was growing, so when you first started, you were just pulling from publicly available information, other news sources and stuff like that. How, as you grew and you started getting more VCs and these PR firms on your list, were you able to start, like, I don't know if breaking news is the right word, but like start like putting like original information about fundraising and stuff like that wasn't necessarily reported elsewhere?
Yeah, I think we were kind of able to do that relatively early on, mostly because there's a certain level of size in the fundraising world that the bigger publications want to write about. So they would kind of set the bar like, oh, if you've raised $3 million, you're kind of like at the bar where we can write about you, like you've kind of qualified. So that's when the sort of bigger financial press would come and maybe write about you if your story was interesting enough. So there was kind of that, yeah, you sort of had to qualify for the big financial press. The trade press was maybe a little bit looser, but then again, sometimes they just didn't have the bandwidth to cover everything. But we, at Overnight Success, were kind of like, no, we want to cover the entire Australian market every week. So if you've had a fundraise that may not have made it to trade press, but has happened and you want to get it out there, let us know. We're more than happy to cover it. So there's been quite a few times where a founder has just like sent me a LinkedIn message or DM me over email or just like replied to a previous one being like, hey, we closed like 800 grand like 2 weeks ago. We're doing this. Like, would you guys write about us? Because like every other media company is kind of not interested. And I'm like, yeah, hell yeah. Like send it over. Would love to feature you guys. And it's really interesting. Like a lot of founders give me feedback after they see themselves in the newsletter where they're like, I've been a subscriber of this for 3 years. I've had this idea bubbling away. And it's kind of this moment of validation for a lot of folks that they have like made it into the newsletter. And I try and make sure that we cover every capital raise that happens each week, and we kind of give every capital raise the same amount of inches. So you can kind of see some funny things that happen where it's like so-and-so company raises a few $100 million for their Series D, and they're going to expand to the US and take over the world. And it's very like, whoa, this is a big business. And then the next one is like raises an angel round of like 500,000 Australian dollars, and they're building a product and they have like no revenue. And it's kind of like, like good luck to them.
Yeah. But so that 500, really that smaller raise though is probably your competitive edge, because like every other media outlet's like 100%. Is like reporting on that several $100 million raise, but you've got enough of these like smaller raises that in aggregate are actually probably, really interesting to your kind of hardcore investor audience.
Yeah, 100%. And that's when we get into the data side of things as well, like the Crunchbases and the PitchBooks of this world, who are really American focused. They do cover the Australian market, but they only cover those big ones. So not many funds here in Australia use those products because, one, they're really expensive, and two, the data's kind of crappy. So yeah, us doing that work allows us to sort of have much better data, which is way more useful.
Yeah. And do you cover other things than fundraising? It looked like you had like an M&A section and even maybe a jobs, like these people are being like just noting like so-and-so got hired at this place or stuff like that.
Yeah, I guess the headlines, originally it was really just like, here's who raised money. To be honest, that actually gets kind of boring to write about after a fair while because they're very formulaic. You sort of notice that there's trends in companies that, pop up. So like there was one period during sort of just after COVID where I felt like every week I was writing about like a climate accounting software that was counting carbon credits. And it's like, you can only write about that so many different ways. Like it does get quite boring. So the sort of direction I went was like, okay, let's put a headline section in each week, which is focused on like, policy, really interesting things that are happening in market, and try and tell those stories in like the shortest way possible, and almost as if I was like explaining it to one of my mates at the pub who doesn't work in startups. Because if you get an article that's like 700 words or a few of those, or a story that's happened across like several articles across a week, condensing that down into like a couple dot points is like quite an interesting challenge. But I think a lot of people who read the newsletter really appreciate that it's like, oh, I feel like I've read this, this 200 word chunk of dot points and I'm fully across what has happened. And there's very rarely any opinion in it. Sometimes I put an opinion in, but I just sort of trust my audience is smart enough to come up with their own opinions about what has happened. And I think people really appreciate that side of things as well.
So you said in your email to me that you now have like a run rate of like 100,000 Aussie dollars a year in sponsorships. At what point did you start, taking on sponsors for the newsletter, and like what was your kind of strategy for finding sponsors?
Yeah, I mean, as soon as I could kind of possibly do it, I tried to bring on sponsors. I think in the early days, we were really working with quite grassroots Australian ecosystem businesses. So it might be an accelerator who was trying to just advertise to get more founders applying, or it could be like a recruitment firm who was working very like locally in Sydney or Melbourne. And that's when the audience was, like sub 500 people. I think as well, the good thing that's happened when I launched this newsletter is like the amount of interest and capital and folks getting involved in Australian startups has really picked up. And I think we were sort of at the front of that inflection point. And what's happened in the past, I guess, 2 years is some very big US brands are now building a presence here in Australia and really looking at the Australian market as a growth area for them. And Vanta being like probably the best example of that. So I've had a great relationship with Vanta since they've first arrived in Australia. So much so that like I even met the sort of like GM here, and I guess sort of walked him through Australian startups and VCs and what were the events to show up at and what were the events maybe that look really high signal but probably don't actually offer you much, or the people who attend it aren't really the audience that you're trying to get in front of. So built a really healthy relationship with Vanta. And I think that sort of group of sponsors who are US well-funded coming to Australia to build their presence has really allowed us to charge a healthy amount for sponsors, provide a lot of value back to them, and build that up. And the way I kind of structure sponsorship now is there's like the headline sponsor, which I sell for a minimum of 3 months. And that's a campaign that evolves over time, but very much like you are front and center of the newsletter. Everyone who reads it sees your advertisement. And then I have a secondary spot as well, which is usually a shorter term arrangement. The one I've currently got right now is for 2 months, so 8 sends. And I try and reserve that for like an Australian business that's working with working with startups, and the rate for that is a little bit cheaper. Because I think if you just have two big brands, it can be a little bit like hard to sort of, I don't know. I sort of want to stay close to businesses who work here in Australia as well. So yeah, that's how I sort of separate the two sponsors.
So like, I don't fully understand, like, what are the types of businesses that want to reach your audience?
Yeah. So any company that I guess is trying to sell to a scaling business is who we kind of work with. So Vanta do the compliance, Stripe obviously do payments for tech companies.
Okay, so like B2B companies that want to reach like growing startups that have some kind of enterprise IT budget or something like that, and they want to sell their services to those like startup founders or also small to medium sized business type of people, basically.
Yeah, 100%. And then that secondary slot is more like recruitment firms, agencies, PR groups, those sorts of smaller firms where it's kind of like there's 10 people who work at this, and they're really trying to build their brand for the first time with startups.
And how are you getting these sponsors? Like, are you cold pitching them, or are they all inbound?
Yeah, the signal I kind of look out for is the majority have been inbound, but the signal I kind of have looked out for that's worked really well is they hire a team locally. So like they'll announce like, Vercel now has a head office and we've just hired our GM of Australia. And I'm kind of like, they're investing in this market for the first time with people and boots on the ground. That's a really good time to sort of get in touch with them and just start to build that relationship. And the lead time can vary. Like sometimes it can be a matter of weeks, sometimes it can be a matter of months. But that's generally like a really good time for me to get involved and say like, if you want to get your product in front of the grassroots of Australian startups, like my newsletter is a really good way of doing that. And then we can run events off the back of it. But you have to sponsor the newsletter first, and then we can do those other fun things as well on the side.
So you've also launched a data product. It looks like it costs like $800 a year. Walk me through the genesis of that. When did it launch? What was the kind of light bulb idea that led to you doing it? Kind of walk me through that entire part.
Yeah, sure. So maybe it's good to just explain what the data product is firstly. And I think the closest comparison would probably be a tool like Crunchbase. So really just almost like a spreadsheet where you can click through on the company, on the person or the investor, and you can kind of see, who's involved in a deal and how they have previously invested together, or if this is the first time they've done a deal together and all those sorts of things.
Yeah.
So
For the people who don't realize, Crunchbase is like a huge database product. If you've like tried to like look up any startup, they're usually one of the top search results. But if you pay, you can like their whatever their annual subscription fee is. You can drill down, see everybody who invested in the startup, what the valuation was. You can click on that firm, and it tells you all the other startups that firm like invested in. So like it's often used for like for research purposes and stuff like that.
Yeah, exactly. And when I was working in the world of private equity and finance, like we would use tools like Crunchbase all the time to do quick DD or find competitors in a market and all those sorts of things. So I was kind of quite familiar with it. And actually, I didn't mention this in my sort of like career journey, but I did a 6-month stint in sales for a company called Meltwater, which is like media monitoring software. And that kind of, I suck at sales, but so I didn't enjoy that job, but it kind of really taught me this interesting dynamic of like media can be valued differently if you present it in a different way. So that's sort of like just an interesting tidbit I've like carried with me since I worked at that company, because it's quite an interesting business. And I guess that's
why Bloomberg Media, like the main cash cow is the Bloomberg terminal. Like that's like a $9 billion a year business that costs $23,000 a year, which it's not even, the Bloomberg Media part is just the loss leader.
Yeah, exactly. And you could probably make the same argument for what I'm trying to do now. Like the newsletter itself, like washes its face now and it's profitable, which is really nice. But if I zoom out in 5 years' time, if media is still like the main business driver of this company, I think I'll be a little bit disappointed. So I guess whenever I was at an event or meeting folks in the industry and they worked out I did this newsletter or we were speaking about it, I'd always ask them like, what do you find valuable out of the newsletter? And often getting very similar feedback where venture capitalists would be like, oh, we use it to fill our CRM with companies we want to put on our watch list. If I spoke to founders, I would get this feedback like, yeah, we're fundraising in a few months' time, so we keep track of who's done a deal in a similar business as us because we want to reach out to them. And then if I spoke to someone who was in that enterprise B2B world, loads of salespeople were like, yep, Saturday morning, I get your newsletter and I sit there with my CRM on my laptop and I drag leads across and I claim them as quickly as possible from my teammates. And I found that there was this really interesting dynamic of like, oh, people use this newsletter to find business opportunities, basically. And I had one founder who DM'd me one day out of the blue, and he was like, hey, Will, just wanted to say thank you so much for writing the newsletter. I've been trying to raise an angel round or close my angel round for the past like 6 months. I'm just looking for like a few checks remaining and I can't find angel investors anywhere. So I went back manually over the past 3 years of your newsletters over the weekend and found every angel investor that you've mentioned that's sort of relevant to the company I'm building. And there was like 12 of them. And then he's like, I've DM'd them all, sent them all a cold email, introduced myself, and it led to 5 meetings and I got 3 checks and now I've closed my round. And like, great. And I was like, holy shit, like how long did it take you to go through 3 years of archived newsletters? And he's like, oh yeah, like 12 hours on my Sunday, but it was worth it. Like the ROI was there for me. I'm like, good on you, man. Like that's incredible. Like I couldn't imagine going through 12 hours of my writing, but really interesting insight. So I sort of had this idea in my head of like, how do I make this information I've got, which is really, really niche to Australian startups, much more accessible for folks who work in the industry. And the obvious answer is to sort of like try and build your own database product, which I've now done, called Deals OS. And I guess started building that before Claude Code was really a thing. So the first MVP went live probably about 18 months ago. And we got customers relatively early, which has been really good. And I think the main drive after launch was making sure our data is as good as possible. And now Claude Code and AI and those sorts of things are much easier for me to actually build a product. Now starting to build out a much more custom product that uses that data, which is really exciting.
So if I understand correctly, you're able to use your current workflow to like backfill the database because you're already writing out these deals and stuff like that. So it's just a matter of having a way of taking that information and then inputting it into the database product. So it's like you're kind of killing two birds with one stone. Am I understanding that correctly?
Yeah, 100%. So in my inbox now, I've kind of got Claude constantly reading the emails that come in. So obviously I get press releases, I get articles from newspapers that I read anyway. And then I get just like founders messaging me with information here and there. And I also see stuff on social media, often LinkedIn. And I kind of have a way of ingesting that into Claude, who then kind of like sorts that information to my database and then makes it accessible for everyone. So it's very similar to the newsletter. Like you're just kind of doing that work for people. Which is, it's an annoying thing to do. But if you can do that work up front and put it in your database and then have things linked together really neatly. So, a venture fund is a great example of like, if you can kind of track their portfolio over time, you can kind of see who they invest in, how many times they've invested in a single company, how they interact with companies. You can build this really interesting story that gets quite useful for different folks in the ecosystem to use.
And you're able to compete against the larger players because, like you said, they are only doing the biggest raises, whereas you've got the regional advantage and that you're willing to like go and and look at those smaller raises as well.
Yeah, and now that I actually work at a genuine venture fund as well, you kind of realize like how many deals don't get publicized as well, which always been aware of. But yeah, it's really interesting to know sort of like how much stuff happens beneath the surface of publicity that doesn't get mentioned. So that's kind of like the next nut to crack. But yeah, directly comparing to like a Crunchbase, we probably see like 30 to 40% more, or we write about 30 to 40% more deals than they do. And that's the same in the database as well. They just seem to not have coverage here, which is interesting.
And with like Crunchbase and some of these others, like the kind of funnel that a lot of people is that they're Googling a company and they land on the page and then they start clicking through and trying to get more information and eventually they hit a paywall of some sort. But yours isn't like that, right? Like you have to kind of more manually funnel people into the database.
Yeah, that's a sort of challenge I'm trying to work out. What's the optimum way of pushing people towards the database product? Because that's how I can monetize a reader much better, basically. But right now there's kind of like the media thing, which is the way the vast majority of my audience sort of interacts with Overnight Success and knows about the business and I guess hears from me. And then we subtly here and there sort of like push them towards the database every now and again. One of the areas I want to play in is having much more, because right now the newsletter is sort of a weekly thing that summarizes the previous week. So how do we become more of a daily ritual for people to actually go on the homepage and refresh information? And like we'll probably be competing then with trade press that exists here in Australia as well that focuses on startups. But I think if we can overlay that data layer into those articles as well and tell those sort of data stories as well, it'll be a much different product that, provides much more value. And that can be like an interesting way in for readers to sort of like stumble upon this data product, see value up front, build trust, and then hopefully become a buyer as well.
Yeah, and some other database companies do this. Like, a Bloomberg report. Every Bloomberg reporter has access to a Bloomberg terminal, so they can go in, manipulate data, create a chart, and they're constantly pulling from that, which is in effect basically promoting the Bloomberg terminal and giving people ideas for way that they can manipulate the data. So you're talking about that is like, how do we go into this database and find stories within it, so like trends and stuff like that, and link and continually be linking back into the database as a citation so that people will come across it more naturally.
Yeah. And I kind of organically do that already when I write the main newsletter. Like I use my database as sort of like part of my research tools now as well. And I can kind of work out like, when did this company previously raise? Who did they raise from? Did the person who led the round last time stay in the deal, and that can be like an interesting signal about the business. So you can pull things out yourself, but I think, yeah, to your point, like doing a much better job of letting the world know where that data comes from is kind of the next frontier for me.
And is that like you have a full-time job, like is that hiring someone to start creating those stories, or like I'm guessing you're pretty much stretched to the limit here. So how do you increase production even more?
Yeah, so I've ebbed and flowed about hiring someone a few times, and there's been moments where I've had someone else jump in and help. The reality is it's very hard to find someone who's like equally as passionate about this like niche as me, which is a really weird thing to say. But yeah, if you meet a journalist coming out of university who's sort of like keen to get their sort of wedge in, they're very often like not super interested in the world of startups and tech to the degree that I like need them to be. So what I've kind of looked at doing is like, how can I use AI and Claude and automations to build these processes out? I'm going to say something that I think like some journalists listening might be like quite pissed off on, but I think I'm firmly of the belief that like trade press in particular may not need journalists, because you do need them to fact check and those sorts of things, and that's kind of like my job. But I think the reader just wants to know the facts of the case. And there's a lot of like articles I read in trade press that have like a fluffy introduction, some fluffy quotes that are probably AI generated themselves by the PR firm, and then like fluffy chunks here, and the actual facts of what happened are few and far between. And you kind of turn what could be 150 words into 500 words or 700 words, because that's just what your articles look like. And what I actually find I end up doing is I get sent a press release and I'm using AI to like condense it down into a much smaller chunk that's just facts. And I think that's actually what my readers want. So I think there is a world where trade press in particular can become a really, I think we're going to see like the revival of trade press, because there was a world maybe 10, 15 years ago where people paid subscriptions to read about like their local restaurant, or like restaurants of Melbourne, but then that journalist was no longer able to sort of justify their job anymore, and that media business died. And I think we're going to see a resurgence back to these niche trade presses being really vibrant, because AI can do a really good job of actually summarizing what's happening in that industry.
Yeah, I mean, I don't 100% agree with you. I think like we still need journalists to like pick up the phone and uncover things that isn't necessarily in the press release, and that there's a lot of journalism that isn't, like even this interview we're doing right now. Like I'm pulling stuff out of you that it might not even have occurred to you to share. So that even if you had written some blog post about how you did your thing, I'm unearthing facts that might not have been in that blog post. But I kind of agree with you in the sense of, I was just listening to this interview with this like former journalist from The Verge who went off and launched his own Substack or newsletter or something like that, and he kind of ruffled a lot of feathers when he came out recently, admitted that, or maybe even admitted is a strong word, like he wasn't hiding it, was that he is using Claude to write his articles, and he sees his job as unearthing facts, and he thinks it's a waste of time for him to spend it writing articles. So like he's like spending the majority of the time like getting people to tell him stuff that they don't want to be public, kind of thing, like doing the actual like reporting part, and he's like outsourcing the writing to Claude Code. And he thinks that like, obviously there's a lot of when he came out and said that, there was a lot of backlash, but he thinks like 5 to 10 years from now that's not even going to be controversial. And so I kind of half agree with you, but not fully in terms of, but for you, like you don't consider yourself a journalist, like, or at least not that kind of journalist. Like you are, you are breaking news, but it's like specific kind of data news. And like, I could see why in your particular case, you like having Claude or whatever go into your database and find like database stories that don't need original, like actual extra reporting, like why that would be valuable to you and your audience.
Yeah, definitely. And I mean, I do agree with what you said. Like you do kind of need that person to sort of oversee things and make sure there's no hallucinations and ask questions and pull that stuff out. But yeah, I think you can definitely shift a fair bit of the actual work to some of these AIs to condense and actually turn it into good writing that's well edited. And like, I mean, I don't think I'd be able to run this business for as long as I have if I didn't have AI doing a fair bit of work behind the scenes. So yeah, like it's like, do you want more media covering certain areas? Then like, yeah, you probably need AI to augment some of the work. So yeah, I'm a big believer in it.
So I'm guessing like in terms of next steps or what you want to be doing a few years from now, like I'm guessing you're not launching a podcast or an events company or anything like that. Like you're like right now you're just a solo founder who also has a day job. Sounds like you're focused on that right now. But like what is the future opportunity for you in like the near to short term type of thing? Is it just like doing what you're already doing and then just trying to grow this database product, or do you want to do something more ambitious?
Yeah, I think there's been a few. I think there's the media side is really how I've built trust and built the audience. I think the job to be done now is really monetizing that audience and building product. And again, like we're talking about a relatively small audience, right? So I think in Australia here, the products that have built and want to keep building, there's obviously the database, which helps people make better decisions. I think there's an interesting opportunity in jobs and helping folks connect with each other and find opportunities in startups here. And then the third one is investment as well. So we've also recently launched an investment syndicate. So I can basically, people who opt into it, I can present early stage startup opportunities to them. I am personally investing in the deal, and then my audience can also invest in that company on a deal by deal basis. So they do their own due diligence and all those sorts of things. And there's a fee there as well that I can get. I mean, to be very transparent, like running a syndicate's not the most. It doesn't bring in the most money, to be completely honest. But I think it's an interesting way of getting reps in. And I think once you have a really big syndicate and you are doing, north of $300,000 deals to $1 million deals, it can be quite lucrative. So I think very similar to the newsletter itself, like these things will just continue to compound over time and become really interesting. Like the newsletter itself wasn't interesting 2 years ago from a sponsorship and a money perspective, but now it is. And I think the same thing will happen with these other products. And all those products have just come from speaking to my audience, working out what they want, and then building that product for them. And I think once you've kind of got that foundation set up, I don't see why I can't take that same product and that same idea to New Zealand, to Singapore, to other regions in APAC, and build it. For their startup ecosystems as well. And I think like it wouldn't be me necessarily who's the face of those brands, but it probably would be the Will Richards of New Zealand who's young and hungry and wants to build their reputation, and giving them the toolbox to do that locally. That's probably how I see it expanding over time. But again, bootstrap business, so these things just take time. You have to be patient.
So just to unpack some of the stuff you said there. So you said a job board. So like the startups and stuff like that, they could pay you to like list their open positions on the job board.
Correct. Yep.
Yeah, and then the syndicate, I sort of know what this is because I interviewed another founder. So it's like, and I don't know how yours is structured versus his, but it's like a select group of accredited investors who can join the syndicate for some like annual fee, and that's how you make your money. And then you put deal flow in front of them, and then they have the opportunity to either to invest or the investment comes out of their fee as like a part of a fund, or like how does that work?
Yeah, so I guess slightly different to the one you just mentioned. We don't take a fee on joining, so it's free to join. Investment syndicates, I think globally are like, a place where quite wealthy folks go to put some money away into interesting opportunities. I have framed my syndicate more so on really democratizing, bringing people into these deals. So I kind of noticed that there were a lot of angel investing in Australia has kind of been the remit of like the old wealthy white guy. What I sort of have seen as startups have become more normalized, and we've had some really big success stories like Canva and Atlassian and companies like that. The people who work in those businesses are on probably quite high salaries. They've done really well through equity. They are maybe moving on from those companies and looking to reinvest back into tech. And they kind of don't know how to do that. They probably may not have enough money to give it to a fund. They're sort of looking at angel investing, but it can be quite scary because if they're doing a single deal, that founder wants them to put in, $25,000, and that's a lot of money. So through a syndicate, and through my syndicate in particular, they can invest like as low as $2,500, and the fees on that are, in the single percent, and they can kind of spread their bets over a few different startups over a couple of years. And we basically just take a fee on the money that goes into the company, which is purely like they make the decision. Yeah.
And that's like 2%, right? 2% fee.
Exactly. Yeah.
Yeah. So if it's $1 million, it's like $20,000 you're making from annually from that, or from that amount that was invested or whatever.
Yeah, exactly. And it really only came about because I see, because of the trust I built with the newsletter, a lot of really early stage founders come to me at the start of their fundraising journey, and they're kind of like, can you make introductions, or can you look at my deck, or do you know anyone who would be interested in us? And I'm always happy to help behind the scenes and do those sorts of things. But if I'm particularly interested in this deal, it's like, oh, maybe I'll invest in this. And then if I'm doing that myself personally, if I can bring some of my audience along the journey as well, that can be quite interesting for everyone.
And do you also get the 20% exit fee as well, or no?
Yeah, there's the carry side of things as well. I think it's 15% actually with our syndicate. Okay,
cool. And awesome. Well, Will, those were all the questions I had for you. Where can people find you online?
Yeah, so on LinkedIn, Will Richards, the newsletter can be found at overnightsuccess.vc, and the database as well as on that website too.
Great. This is a lot of fun. Thanks for joining me.
Thanks, Simon.